Yesterday's price action, if I just mark in isolation and then we'll talk about the month, I think yesterday's price action is more than satisfactory. It was very encouraging. Strength came from an unexpected pocket, which is banks, and bout of short covering by foreign institutional investors in the F&O market, and the rampant selling in the cash market was missing yesterday. So when you have a large sector, which is banks, if it is leading the charge and if it is fueled by a bout of short covering by foreign institutional investors, that in a sense is the perfect combination to create short-term positive price action, and that is what we saw yesterday. So yesterday's price action was encouraging, and typically when you see such a powerful comeback in a laggard sector like banks, which is backed by flows, backed by numbers, and backed by sheer force of liquidity, then typically that price action actually would extend itself. So in my book, the story yesterday was the surge in the bank Nifty, and I think that really could be the trend for next couple of days.
Yes, indeed. ICICI Bank, HDFC Bank, Axis, AU Small Finance, across the board, we saw a very smart recovery coming in on the Nifty Bank Index. But in the same breath, it was the IT index that didn't quite perform. In fact, you had a lot of laggards within that space. And since the 16th of February, the IT index has fallen nearly 13%. And Nikunj, if we were to just map out history and the kind of moves that we've seen in the frontline index, in the month of May, the seasonality factor is another thing.
See, A, seasonality. May has been more positive than negative.
Yeah.
And B, it's the undercurrent of what is happening in terms of the election cycle. Historically, there is data, and that data is evident that markets always tend to outperform in the month of May. B, markets in the run-up to the election also, they tend to outperform. So 7 out of 10 times markets have outperformed. So there are two factors here. Irrespective of the election cycle, markets, May has been a strong month. B, because of the election cycle and what the opinion on the street is, I guess markets are unlikely to fall. So if April was the comeback trade, I think May really could be the extension of that comeback trade. Volatility, at least India VIX, is almost at 10-11%. I mean, it's nearing towards 10. That means that there is no nervousness in the market. So the setup for the month of May from a market standpoint, I think is easy to understand, which is that volatility is low. Earnings season so far has been decent. No major upgrades, but no major downgrades. And if foreign institutional investors, which really has been the bugbear for the market, if they turned neutral, or if there is a bout of short covering like we saw yesterday, then we could be in for some smashing days ahead in the month of May. So the way to approach the month of May is that you really have to relook at lenders now across the board. IT, the rotation trade I think is evident. Small and mid cap stocks, we told you so that the FOMO crowd is there, and I think that trade will continue. So as of now, until and unless something goes wrong globally or something happens on the geopolitical front, you would say that in the near term there is fair amount of visibility that markets should do well in the month of May. We'll take a fresh guard, we'll talk about it if something changes globally, but the setting on the table is such that the price action is going to be more constructive. It absolutely amazes me the power of this bull market. From March to April, look at the comeback. I mean, no one in the wildest dream would have thought that we would see a 10% surge in the small cap index. Nobody thought. I mean, when the sell-off happened in the month of March, it was like, okay, goodbye to the bull market.
Yeah.
And look at the comeback. And that is the bull market we are in. We must realize that there is no point in being bearish for the sake of being bearish. You will get bad days, but if you participate on those bad days, when good days come, you would be recorded.
Yeah.
So don't...
And this at a time, Nikunj, when there's such a strong tug of war, if you will, between banks and IT, and the kind of laggards that IT as a sector with equally large contribution and weightage on the indexes and the markets across the spectrum, large caps and mid caps, is completely lagging.
So, Aisha, I think from a market standpoint, IT is crucial, IT is important, but it is not relevant right now.
Yeah.
Banks is where the earning momentum is there. And just look at the banks. I mean, you take some casualties aside like Kotak Mahindra Bank, which is a case-specific issue, HDFC Bank, where they're moderating growth. But you just take these two names aside. I mean, the two sumos outside, the rest of the banks have delivered, whether it is IndusInd Bank or whether it is ICICI Bank or whether it is smaller NBFCs or Axis Bank. So markets are telling you that, look, lenders are doing okay. If lenders are growing without NPAs, that means economy is doing well. Liquidity is coming back, inflation fear is behind us, so time to go back to lenders right now. And I think that is a trade which could be a trade for next couple of days. We were hunting for leadership based on yesterday's price action. Will the leadership come back in lenders? Because that's a large sector.
Yeah.
That's 35% of the weightage. You take out Kotak, you take out HDFC Bank, it is still a very handsome representation. And I also feel that for HDFC Bank and Kotak also, the collateral damage has been huge. I mean, how much more can they fall? It is not that they are not growing. Markets will readjust the growth numbers.
So perhaps it's now behind us when it comes to those large banks?
They will not pick up in a hurry.
Okay.
But they may not fall like the way they've fallen. See, the underperformance in HDFC Bank is getting checked. The price action in Kotak Mahindra Bank, it just could linger there. They are not the heroes right now, let me put it this way. They are the backbenchers. But if you're the backbencher, that does not mean that you will fail the test or you will be kicked out of the class. You're still part of the class. You're still part of this 2021 bull market class.
Absolutely. And just to give you a color on how the earnings have been from within the mid and small caps, it's been a good set from Jana SFB, from Poonawalla FinCorp. These two are going to be the key ones to look out for. Jana, of course, the newly listed entity. Canfin Homes as well has delivered numbers which are higher than what the street was anticipating. Similar is the case with an Indostar Capital as well. Inline set for a Birla Soft, for a Gillette. But yeah, weak numbers coming in for KFintech, for a Spandana Spurti, for a Tata Chemicals as well, where the numbers have hugely disappointed. And some of these mid-cap earnings reactions have been quite stark off late.
The common connect here is NBFCs and lenders. Again, I go back to that whole point. The common connect here is that consumer brands are not slowing down, whether it is number which has come from Trent or the kind of numbers we've got from Poonawalla. The common thread is that the economy, which is consumer-facing pockets, which are dominated by demand, there is just no impact whatsoever. We are talking about an earnings season where the base is high. And in that, the companies which have come out with numbers lower than estimates are 6. And that, usme 4 to IT hai. Out of those 6, 3 would actually be IT. You take out IT, then the earnings season so far actually has not been that bad. In line and above, 7. So it's not bad at all. This earnings season may not warrant a huge upgrade at an index level. But this earning will clearly be differentiating a lot of lenders, a lot of manufacturing companies, a lot of capex companies where numbers I think are going to be far superior than what they are. What I would watch out for is that markets are gung-ho on metals. I'm not so sure what metal companies and some of those pockets would report, because I genuinely get a feel that it's not that great for cement and steel. Stocks may have gone up, but I think the underlying current, at least of demand, is not so strong in metals and cement.
Okay, that's the earnings roundup. And Nikunj, although you have already spoken in terms of what the strategy should be, that on bad days as well, if you look at a buying opportunity, you will be rewarded. Lenders can outperform. And even we've got a trigger in terms of the elections, etc. So all of that at least should hold us in good stead.
See, the main strategy should be simple. Be positive, stay positive. Seasonality is in your favor. An election cycle till the time the result is not out, that's still about a good 45 days away. Markets are unlikely to crack. The only risk right now is global risk, which we don't know. Then, in terms of the rotation, I guess if FIs, they get a sense that, FIs will come back. Now, whether they come ahead of the elections or they come after the elections, that's a judgment call. But if they decide to come ahead of the elections, then the lenders and especially large lenders will do well. I think the long metal trade may be losing its sheen, because I don't see too much happening at the global level for metals as a category. But in general, I guess your bias should be positive, commitment levels should be high. Please don't go short and don't sit on too much of cash.